Morning, Chris. Thank you, Ashley. Okay, you may or may not have seen the headlines this week. The CFTC, Commodities Futures Trading Commission, are going after, quite rightly by the look of it, My Forex Funds, which was one of these purported prop firms. And they have, by the look of it, what they've been up to, they have been defrauding clients to the tune of hundreds of millions of dollars, and they're going to get their day in court. Everything, the company has been suspended both in the US and in Canada. Not quite sure why it's taken the CFTC so long to get this far with them, but they are attempting to get funds back for clients. Although it looks like one of the main protagonists has spent a lot of it. So how much is actually left for folks? Not sure. YouTube and social media was alive with it yesterday, and everybody jumping in with their two penneth. And we started, Andy's written an article about the reasons for all of this. And he's gone through this in a nice short article that we will post later today. So the first thing that they've been done for, they've been for selling a false dream. And you have to be so careful in FX because everybody's selling the dream of getting rich quick. And we, of course, spend our time trying to tell you, no, you won't. But if you can do this properly and ethically, then you have the chance to make substantial income over a period of time. Now, the big thing that they did as well is that what they said was that the firm would only make money when they were making money. And the reason for that was that they claimed that when you placed an order, it was going directly into the market. However, it was not. They were taking the other side of the position. So they had a vested interest in you failing because when you lost, the money went to them. Now, this has been an issue in the Forex world for the last 20, 30 years. And although the brokers have been cleaned up somewhat, you still need to be very careful. And it's known within the industry as running a B-book. And I have personal experience of this. One of the big Australian brokers arrived on the scene 10 plus years ago, convinced a lot of us, including myself and Gavin from Aslan, that they were going to be 100% transparent. And they weren't. They were playing the same rig game. They were running a B-book. The owner's directors made an absolute fortune out of it. And as far as I'm aware, still haven't got done. So I'm saying nothing in terms of the name. But it has been a problem for a long time. And then the second issue was the rules. And if you remember when we started with FX2 back in December, we'll come on to them in a minute. I was saying the thing that I did like about them, they had 3 rules. Most of these systems were set up deliberately to trip people up. And I think I've told the tale. I think I've said it. I've certainly told private clients. I don't know if I've said it in a live session before, but I was approached about 2 years ago by a software company, and they were providing the software for a lot of, or some of, these funded prop firms. Are any of you familiar with the term of white label? Well, I grab a sip of my tea. Anybody know what a white label means? Another Dan. Good morning to you, Dan, as well. First time here. Good to meet, he says. Is that short for good day? Morning, Niraj. Good day as in Aussie, Dan. Where are you from? And how long have you been trading and how are you getting on so far? Morning, Niraj. White label. A white label works in the following way. And we were contacted about this for numerous things over the years. I was contacted for this for binary, and that was a scam. That was a real racket. And the way that a white label works is as Niraj says, you put your own label on top of an existing software. So, for example, if a Forex broker came to me and the Forex broker was called 123, hopefully there isn't one called 123.com, Forex trading, Forex brokers, they could come to me and say, right, you can have your own trading firm. You can call it Forex Mentor Pro Brokerage, and they will supply all the software, back-end, finance, the whole lot. basically all you are doing is you are putting your name above the door, a bit like a McDonald's franchise. So your face and your brand goes on the door, but everything that's going on in the background is being done by the aforementioned company. So I was approached about 2 years ago about these funded accounts, and the firm selling the software basically said to me, you could make a shed load of money. And I could have made a shed load of money. And their best client at the time was making net $100,000 a month from this. And the reason why is that the rules were set up to trip people up. And I explained this before, when we'll come on to this in a minute, when we did the webinars earlier in the year with David Dobroksny from FX2, that it was all a Ponzi scheme, because the way that the system was working is that this 100,000 this firm were making, what they were doing is they might take $120,000 in, and then 20,000 of that 120 would go to pay the few who got through to the next level. So the ones who've gone from an evaluation account onto a profitable account, and now this supposed prop firm is supposed to be then paying them a commission. If, despite all the tricks and traps in there and the cheating that goes on, somebody still manages to make money, the profit to that person will be paid out of the 120 coming in the front door. So in other words, it's a Ponzi scheme. And Ponzi schemes only keep working as long as you have enough fresh blood coming through the door. And so what this software firm said to me, look, it's a great way of making money, because anybody and loads of people who shouldn't be on a funded account are having a go because they want to get rich quick. On average, they will have a go 3 times before they realize that it's rigged. So in other words, it is set up that everybody is going to fail. The few that get through will be paid out of the rewards from the money coming through the door. And at every stage, so if you get through from an evaluation at 10 grand and you get all the way up to 100 grand or 200 grand, one bad month, snakes and ladders, you go all the way back down to the bottom. And believe me, as soon as you start to pop your head above the parapet that you're on a bigger account, they will be watching your account more than others to make sure that you fail. So that's what this arbitrary rules goes on. And within that, they also had misleading commissions. So they were rigging the commissions to reduce the client's account balance, and then manipulated software, as I just explained. Oh, this is to do with slippage. So let's say you go to make a trade and you are going to sell the euro today at 108. You place the order to sell at 1.08, sell, and the order gets filled at 108.20. So your risk reward's gone out of the window. You're risking more than you intended to risk. And even if you make a profit, you're going to make a smaller profit than what was intended in the first place, what you planned to do. And again, this has gone on with dishonest brokers over the years as well as. So the conclusion what Andy came up with is it should bring more clarity. And in truth, the whole Forex world has needed to be more better regulated for a long time. What tends to happen is that organizations like the CFTC wait until things have been going on for years, and it may be because they've been building a case, and then they tend to go in with a big stick. And so last time we had it, where the big change was where we went from leverage from 100, 201 down to 30, which really, with a professional level trader, was screwing them, because it was dramatically reducing their chance of making money. And therefore, what was happening then is that the pro traders were then having to go to offshore places. And I've explained before, I initially was trading for clients on a MAM, where I would place the trades for them, and it would be from my account would be shared to theirs. And at the end of the day, the P&L would be split. So if, let's say for simplicity's sake, if I have $1 million to trade from 10 different clients, so that 10 clients have 100,000. When I go to place the order, I am trading 1 million, but in effect, it's the accumulation of the 10. So the money never left the client's account. And that's another thing, one of the other big frauds that's gone on over the years. Never, ever, ever send money to anybody to trade Forex for you. The way that we used to do it was it would stay within the client's account. Only the client could withdraw to their own bank account or wherever. it was funded from. So we did that for years from London, and then London tightened up too much. So then we went off and formed a company in Cyprus. Cyprus, part of the EU. Yep, still EU law, still regulated. I've since come to realize it wasn't as regulated as well as we thought, but that worked for a while. Then we had to go off to Australia, because at the time Australia was behind the curve in terms of reducing the leverage, and we went to global prime, and we were with them a few years before they then had to move. I think it was just non-Aussies. We had to go off to Vanuatu. I couldn't find it on a map. I couldn't spell it. Not very confident about having 6 figures with brokers in completely out of the way places. And even though there's not been any problem with global prime, and I trust them more than most, it still is a little bit of an alarm bell. So the point is always with all of these things is buyer beware. So in December, if you have a look back, we'll put the links in the recording for this. This was an article I did in December last year. And I talked about the fact that I had shied away from this for years because I was concerned that this was a Ponzi scheme. And I explained that when I was trading for clients, I was charging between 27.5% and 35%. So if somebody came to me with less than 100K, then I would charge them 35% of the profit as a profit share, no management fee, no win, no fee. If somebody gave me more than 500,000, then I would charge them 27.5%, which seems reasonable. So when these companies come along and they're paying 80% plus sometimes, that was the alarm bell for me. And having spoken to this white label firm, I knew that the way that the system was working. However, I started to mellow a little bit with it. And I do think FX2 are to be congratulated because they have shaken it up somewhat. A lot of the challenges were initially set up, you had to make 10% in a month with a 5% drawdown. And the issue then becomes to try to win 10% in a month with a 5% drawdown is most folks overtrade, over leverage and lose, which means that the chances of getting through the valuation are poor, and then they stump up to pay again. Whereas FX2 came along and there was no time limit. So that was a massive difference. They did also explain the maths to me, and I looked into the background of them. And the point I also made in this is that I feel that it still is beneficial if the companies that survive this route from the CFTC, it still has a benefit from educational point of view. And I was talking to a gentleman on Sunday, David, who's posting in the forum at the moment about his restarting his journey. And I was explaining to him he was going to go onto a demo account. Well, the argument against the demo account is there's no emotion involved. You can cheat, you can move stops, you can break the rules. Whereas if you're on a funded account, then, and the cheapest one for FX2 at the minute is $95, you have a year in which to make the profit, but it does give you the discipline and structure of trading professionally. And I think that $100 is worth it for that alone. The other thing I pointed out in this article and in the live discussion we had with David is it does help you to build a track record. So if all these companies go to the wall, and I did even speak about that somewhere, I remember saying at the time, even if FX2 didn't survive, you will have had the accountability and the experience of running an account in a professional manner, but you will also have given yourself a track record that you can use then to go to a conventional prop firm. You won't make the 80% profit, but if you can prove you can be consistently profitable and control the drawdown, and 12 months is the ideal for a proper prop firm, then it still has a benefit. So I was talking here about even if they've gone, they've got the simplest rules, etc. So if you want to check back through that article is there. The discount code is gone now, but they are discounting on their website at the moment. So say you can, let's have a quick look here. You can do a funded account evaluation. Where's it gone? For $95. And I think that from an educational point of view is still worth doing. And then here, this was the interview we had. So we brought David along. He explained what he was doing, how they were different. And they say it has shaken up the players who are in there because many of them now have reduced the rules. Many of them have stopped it where you have to have to complete the challenge within a month for 10%, which was extreme. So that again covered what my thoughts were with this, and then also David's interview is in there, so worth having a look. Now, I spoke earlier about Forex brokers cheating. Now, what I want you to do here is just be mindful of the fact this is not all doom and gloom. I have lived, survived, and traded through all of the shenanigans that have gone on over the years, and I do believe that it's a lot cleaner now than was. But these are some of the ways in which brokers cheat. And again, this article I will put in the write-up, and it also tells you steps to take to avoid getting conned. So the first common, nice little graphic here, stop loss hunting. So stop loss hunting, and this is why I never trade the likes of NFP, and this was Friday's NFP, which I always warn you about, don't trade. This is an ideal opportunity for brokers, for the market makers, to widen spreads, and they can justify widening spreads because of the volatility. And it happened last week, or something else, I remember. There was another news announcement where there was a big effect. So for a start off, is don't go looking for trouble, as I mentioned all the time. Because I trade from longer time frames, I don't have an issue with stop loss hunting, and I don't have an issue with stop loss hunting because I always put the stop where it needs to go, i.e. for multiple reasons, as we bang on about all the time. Whereas if you are putting your stop too tight, then there is always a danger that you will get stop loss hunted. And what it means is, for example, with NFP last week, once folks have dived into this, and let's say you've initially put your stop in here, and then if you initially put your stop in here, the market makers know there's a shed load of stops in here, so they can widen the spread, and you will even have it where it doesn't show on your Forex chart what's gone on, but you have got taken out. And the reason being is that the spread on the euro has just gone from 0.5 to 5, takes you out, and that is what stop loss hunting is about. Similarly, when folks started to do short at the top, they will know that there was a shed load of stops up here. So for me, I avoid it by trading longer time frames, and I avoid it, and I teach you to avoid it by putting your stop where it needs to go. And then again, it goes through here, the different ones, mark up the spread. So if the spread is 0.5, an ECN, it means that you are a straight through process broker. So nobody is supposed to be interfering anywhere. Some of them will mark up the spreads, and you can see it. If you start to see a pattern that the spread's widening during the day when there's nothing going on, or it seems to be happening all the time, that is a red flag. Slippage, this is one of the old ones. This is one of the big ones where you would, as I said earlier, you go to short the euro at 108, the order doesn't get filled till 108.20. Now, in a genuine ECN STP broker, slippage sometimes can work in your favor. Whereas if they're working against you, it will always work against you. You will always lose out on the slippage. If that starts to happen, get out. Do not continue with that broker. Then requotes is a variation on the theme. So you're going to take the trade, and suddenly the price has gone. And now, because the adrenaline's flowing and you've spent hours, maybe days, planning on taking this trade, you, instead of shorting at 108, you're now shorting at 107.70, 30 pips worse than you anticipated because you were determined to get into the trade. So that one is an easy one to spot. And if it starts happening regularly, then that is the issue. Messing around with the swaps, so the commissions that the brokers are paying you for having an open position in profit. Remember, some swaps will count against you, some go for you. You can check between what's going on, what the true rate is. So if the American rate, I can't remember now, is 5.25%, and they are only paying you 3%, then clearly there is the discrepancy, and you need to find a broker who will give you a better rate. And then finally, it talks about high leverage. Now, the other thing, it's a sensible article, is this, because it says, is your broker really cheating? A lot of people come into Forex that don't understand what's going on. And when they lose, they look around for somebody to blame, and they immediately go off to places like Forex Peace Army and slag off the brokers. And some of them are quite sad. It's clearly people who haven't got much money. They've got sucked into the dream. Maybe I know of people from the third world who have put $100 in, which is their life savings, and lost it all within days. So and then they feel bitter and twisted. But a lot of it is because they didn't understand what was going on. They didn't understand at the end of the day that the spreads widen, or they just don't understand what happens when news comes out, etc., etc. So again, get yourself educated properly to understand what the rules of the game are. Recourts, like they say, there's no excuse for that. That one's a blatant one. Stop loss hunting, I say here, it talks about, well, I've just talked about slippage. As I say, if you get positive slippage, then you could be reasonable in thinking your broker's not trying to screw you. If you get constantly negative slippage, then yes, it is. So then it talks about broker's license doesn't guarantee everything, but look for a broker in a well-regulated jurisdiction. And I think with this CFTC thing now, things are going to tighten up in general, but it could take a year or more to get there. Testimonials and reviews. This, I say, this is a tricky one. If you, Peace Army, I had a look this morning, I couldn't find any real examples, but you would see what used to happen before the likes of Forex Peace Army. Broker A, broker123.com, would pay people to put negative reviews on Global Prime or A another. Other times you will get people who are paid to write positive reviews. But a lot of them are really silly because you can spot the spelling or the grammar is repetitive. And if it's on something like Trustpilot, they've only written one review. So they've, from out of nowhere, they've come on and said, this is great, broker. I love very much. You will see that. So again, buyer beware. Talks about market maker STP. Don't be quick to trust. Yeah, you know, if you've got a lot of money, don't go throwing 100 grand into an account. Throw 5 in to start with. I tell the tale about years ago, a guy who thought he'd invented the Holy Grail, and it was an automated system, and it made him about 400% in a month. And he thought, woof, he's going to make a fortune. And it turned out, when I was living in Lanzarote, he lived about half a mile away, which was spooky. And he asked to meet up in a cafe if I would meet him and discuss it and give him some feedback. And he turned up with a lawyer and an assistant. And I'm like, what the hell? You know, come for a coffee. You're going to pick, you've got to sign this waiver and you can't do this. And you go, oh, for crying out loud. So I just said to him before, I said, which broker have you tested this on? And he told me the name. And again, I'm not for legal reasons going to tell you, but it was a UK broker. And I said, right, I'll tell you what, let's not waste the time of these two and me, because I'm not sitting here any longer with this. Go away, put 10 grand in the account, and then come back to me with the lawyer, and then we'll have a look at it. Never heard of him again. Last time I heard, he was painting houses. Because the thing is that the broker that they'd gone to, the demo accounts are run on a different feed, and they're run in a sandbox where the spread is fixed all the time. So often you can be in a demo account and you think, oh, well, this is good. You know, the spreads are always 0.5%. Oh, wow, this is great. Then you get onto the live account and now the spread goes up to 2-3% at the end of the day. Oh, they're ripping me off. No, they're not. They're just taking you out of the sandbox and they're putting you into the real market. So again, with all of this, buyer beware. CFTC, this is the FCA. So this is the regulatory body in the UK. I mean, one of the things you've got to be careful with is this thing again. I said earlier, never ever send cash money to anybody to trade FX for you or trade anything for you, crypto or anything else. You need to have it where it is always in your account under your control. So the FCA, they talk about on here that, again, we'll put the links in. They say make sure that they are, if you know, a lot of firms claim that they're on the Financial Services Register. There's a link to click to make sure, and the same for the CFTC as well. And then, so Forex Peace Army did have a piece on here about things to look for and things to check. This is a review that's a company, I don't know them, they've got a lot of negative reviews. This is somebody from Cambodia trading gold. I mean, gold is a wild ride, and I never ever use leverage for gold, as I tell you all the time. They're talking about that they cancel the profit. I mean, when you read, the other thing is when you look at reviews, is look for consistency within the accusation. And this lot appear to be that they've got some very strict rules, and they're saying that these people all the time have broken these rules, and therefore they're out. Now, I mean, this one, the reviews for this one, I didn't find that many good ones. But I say these are just kind of little clues to look for, recurring themes. It's the same with everything. It's the same with booking.com, with hotels and things. I always have a look at the negative reviews, because I know from experience that booking.com, if you own a business and you pay the likes of booking.com and trust, what's the other one? TripAdvisor, you can ask for negative reviews to be taken off, and they will take them off sometimes. So again, just be very careful. I mean, this one's giving it a 5-star rating, and then it says it's an ugly experience. And again, they're talking about same IP. Anyway, the whole thing is a minefield. This is Global Prime on Forex Peace Army, and they've still got 4.7 reviews. And yeah, out of all the brokers who we've dealt with over the years, I never felt that they cheated us. And that was including you trading multi-million-dollar funds with them. And if they're going to screw you, if a broker's going to go for you, they're not going to go for you that much on the $1,000 account. But when you're trading $1 million account plus, if they wanted to screw with you, those would be the people that they would go after. And I never had an issue with Global Prime. Or I certainly never had an issue that couldn't be explained or discussed. Right, I just could need a quick drink. Excuse me. Dan says, wow, just seeing the My Forex Fund news. Now, if you are an American, we do have, I am not allowed to give any advice about brokers to any American or Canadian. We do, however, have, if you go into the members area and you go to the brokers, we have Justin Hertzberg, who is a lawyer. We won't hold it against him. He's an American lawyer that specializes in Forex. And he is licensed to give you advice about brokers. So if you're in the US or Canada, stick your details in here and you can have a free consult with Justin, and he will tell you his best advice. Another thing is, when we looked at the things that they can do, stop hunting, one way you can avoid stop hunting is use the trade manager. Now, the trade manager, again, there's a 14-day free trial. I think it's $100, and I've talked about this at length in the past. This manages your trades. It has so many benefits. You can even run 9 MetaTraders off it. So if you're testing different strategies and things, the main benefit for this is for anybody who works for a living and can't be at the computer, or if you're in America and Canada or Australia and the time zones don't work for you when London opens or New York opens, this will manage the trades for you. But what it also does, it hides your stop. So when you are trading a big account, it is very useful for the broker and the market maker not to be able to see the stop. So again, work smarter, not harder. Now, I'm going to have a quick whiz through. I was going to go into detail about stocks and mining stocks this week. I had a conversation with Sadia, a long-term member, on Sunday about this. I don't know if we're going to have time today. Let's have a quick whiz through. Okay, this is the dollar index. Clearly, this is on a weekly. I'm going to go through weekly for a little while first, and then we'll come back and go through daily. It's clearly been a significant break on the dollar index, and last week it came back spookily and it retested the weekly 55 EMA to the pip, and it's bounced off. So it is a confirmed break of the dollar. As you know now, when the dollar is going up and the funds are putting money into USD, then it is general that gold will drop, it is general that crypto will drop, and it is general as well that the stock market will generally struggle at the same time. So the barometer now is we are looking at dollar strength after a major break. If the dollar index was to pull back down to 103.20 again, we would be using that as a clue for buying the dollar Swissy, the dollar CAD, selling the euro, etc. So this is the barometer of what is going on. Does it make any sense? To me, it makes no sense at all, but that's the game we're playing. Now, oil, the other month, I showed you why I had bought back into oil. We got the break of a major trend line. It struggled, did oil at the 55 EMA weekly. I need to adjust this. And then last week, it stopped to the pip. Again, this is a major previous support and resistance. This is not rocket science. But for weeks and weeks, that week it stopped to the pit there. The following 2 weeks, it couldn't break through. So 3 weeks running could not break through. A fourth week, it couldn't break through. Finally broke through when it went higher and it plunged back down again. Where did it stop? This area here, and then back down at the 55 EMA. So this was clearly major previous support resistance. What I said with with oil, when it broke here, I anticipated that the next stage could be $100, and I stand by that. I still think oil is quite capable of going to $100. I don't trade it, and definitely like gold and silver, do not use leverage for oil. I just use this to buy oil shares or ETFs. Gold, now, I've shown you repeatedly with gold. This was the previous buy 1820. Then I showed you the other week I'd bought gold again at 1910, 1920. If gold continues to drop, and on the daily we are in a down channel, then I will be a buyer of gold again. I think I'm in at 1870, 1820, and definitely down here at 1780. I do believe that gold is going to continue to go up, and we could well see the break of the all-time highs if the messy stuff hits the pan for the stock market. This is the pound against gold. This is silver. Silver is also pulling back. I showed you the other week I was a buyer at 23 and 22.50, and again I would be buying again at 22, and I have orders staggered down here. The reason why I was going to quickly go through this, I don't use stops on gold and silver. I buy the physical metal, and I also use this to buy mining stocks. I have about 10 or 12 different miners, and the thing is, within mining, you have 3 different categories. You've got the 800-pound gorilla, which is Rio Tinto, BHP, and Newmont, and they are, I mean, I think, Franco-Nevada, I think they employ 40,000 people. Again, huge companies. My plan is to buy those once price crashes. And then, because they are dividend paying, decent, substantial blue chip stocks in this sector. However, the secondary level are mid-level miners who are mining and are profitable but not making a fortune as yet in general, but have a lot of reserves to go at. They have the potential 2 ways. One, if the price of gold shoots up, then all gold miners will start to make more money, because any extra amount on the sale price of gold and silver will be basically pure profit to the miner. And the other thing is that the 800-pound gorillas are sat there looking to buy out up-and-coming other companies. The final ones are the explorers. So the guy in the river with his little pan shuffling for gold, not quite as extreme as that. They are highly, highly speculative, and they take years often to come to fruition. And you can't just buy one explorer, because the odds on that one being the one that gets through. So you end up having to buy 10 or 20 of them, sitting on them for 2 or 3 years, and hope that they find a decent enough quantity and accessibility, etc., etc. So the ones I am focused on at the moment are more mid-level, and some of them are royalty companies and things I've explained before. And the way I deal with all this is I don't use stops. I hedge when price is going down. Now, this is a royalty company. They don't actually, I don't know if they physically mine as well, but they have their fingers in lots of pies. They lend money to smaller miners and explorers who are now starting to process, and they receive a decent profit share if they find the metals and if they start producing. So these are, for example, I think Wheaton Precious Metals have got something like 50 employees, whereas Franco-Nevada's got 40,000. So for these kind of companies, they can make a shed load of extra profit because their fixed costs are minimal. Their advantage is that being tied to the price of gold and silver. Now, a lot of people are gold buffs all the time, and gold is cyclical like everything else. And there are periods of time when gold does extremely well, and it did well from 2018, the middle of 2018, it doubled by 2020. But then it drifted, and it drifted for a year or more. And prior to that, this was the crash of 2008, 2009. And initially, gold dropped along with everything else, but it recovered quicker. And again, it came from 680 up to nearly 2 grand. So it tripled. So that was a significant move. However, here, for the next 6 years, it went nowhere. I think we are on the brink of a super cycle. It is not financial advice. This is my opinion. That is my thinking, and therefore I am buying miners. I have bought physical gold, which I use Bullion Vault in the UK, and there's goldsilver.com and others in the USA. The miners you buy as a stock, or if you don't want to be doing what I'm doing and buying loads of them, then you can consider buying what's called an ETF, and they will manage it for you. For example, this is Van Eck Gold Miners ETF. And if you look at the prospectuses, have a look on the websites of these companies, they'll show you which miners they have invested in. Now, I will say at the moment, everything technically looks very bearish for lots of miners, and therefore you need to be careful. And I think this is GDX. So GDX is Van Eck Gold Miners. They also have a junior miner. So remember I said about these different categories? Where's GDX? There you go. Somebody tell me where the heck's GDX? There we go. So these are junior miners. These are the ones that the big boys might want to buy out in the future. The reason I'm showing this, if you're completely new, is everything I do is based on the same technical analysis. And so this is my M2 with just the 200 and the 55 EMA. And for stocks and for metals, I do include RSI. Clearly, this is in a down channel. We are below the weekly 55 and weekly 200. And we also now have had a bearish 55 EMA cross the 200. I have an alarm set to buy the junior miners. This is more for my daughter than for me because she doesn't want all the hassle, and I don't need all the hassle trying to manage her account for her. But here is a major area of previous support and resistance. This is the COVID low. I have the COVID low on all stocks and all miners and everything else, because if it goes on a crazy rundown, you've got to be looking at where will it probably stop. And I don't go right to the bottom, which was 20 bucks. I tend to go where it consolidated to. So anywhere between 20 and 24, I would be all over this like a rash. Okay. Any questions on that before we go on to start? Oh, right. Any views on? Yes. Yeah, I have owned, Niraj says, do you have any views on uranium stocks for the long term? Lots of people are upbeat on this as renewable source of energy. Yes, Niraj, I do have some uranium. It's stored in the shed out back. No, it's not really. So I have these shares. I have shares in Uranium Energy Core. I also have, I think this is an ETF, some in this ETF. And I also have a company called CCJ, which is a miner, but also they are in the uranium field. Where the heck's CCJ gone? Can't find it. Anyway, so those are the examples. Now, what I do, if the price of gold, silver, and stocks and everything start to drop, I hedge it. And the way I hedge it is I can sell an ETF. So, for example, this is GDXJ. It's broken below the 55 and the 200. Previously, it bounced off here. You can sell as well as buy. I do not hedge when it comes to Forex because I've never found that it works, and it's too messy and it's too intense. Whereas with stocks, I don't own this as an ETF. I own individual stocks, but I can use this. I actually use JDST, which is dust. Where's that gone? This one. So this is the direction of junior gold miners. So if I want to hedge my junior miners, I can buy this one. And last time I'd shown you a few months ago, I bought down here at a low. And when it came up again, I'm looking at levels all the time. Where is it probably going to struggle? And the ultimate area I expected it to react was at 200. And I did actually do really well. I caught it really well this time for the get out. But then I am watching gold prices going up, stock prices going up, this starting to come back down again, and vice versa. So I haven't really got time to go into this any more detail today, but I can always do this at a future session if there is interest. And this is Uranium Royalty Corp. This is another one where we had a break of the 255 recently. This one, as the name suggests, is Royalty Corp. So again, they are funding other miners. In the US, I don't believe there are any new nuclear power stations anticipated. There's one new one being built in the UK. Europe is going off it at the moment. The French are closing theirs down, but China is in the process, I am led to believe, of building lots of nuclear power stations. So I do think that there is some mileage to be had in uranium as well. I was in platinum before as well, but I've got out of platinum. I found it was going nowhere, and the spread was horrendous on that one. And final thing is I have twice as much silver than gold. And the reason being is that silver technically has the potential. Silver was at almost $50 an ounce back in 2011, 2012. There we go. 49.30 in May 11. So after the recovery of the stock market, it was up here. So technically, if silver can break through here, it has the potential to at least double, whereas gold and silver, the other thing with silver is used in lots of things, one of which is solar panels. And if you see the amount of solar panels that are being built, I think it's Morocco, they have hundreds of thousands of square acres, square hectares of solar panels. And it's a big thing around the world for green energy. And it is a component for that, as well as for computers, phones, and everything else. It is also the most rigged market on the planet. JP Morgan have been rigging it for years, and were even accused of racketeering earlier this year, some of their traders. So it is a rigged game, but at the end of the day, there is not enough silver above ground on the planet for what is needed for industry. And therefore, I am in silver more than gold. Right, that was a whiz through that, wasn't it? So let's have a look now at FX. So this is, again, was a good example of why I do not trade NFP, and I tell you never to trade it. It initially moved up 30, 40 pips, and then it dropped 100 pips. At the end of the day, it did end lower, as we saw. So the dollar index, we've just had a look on there, and the dollar index is breaking this area as well now. So technically, there is a lot of fresh air up here. And it is not unreasonable. Again, you have to start looking and thinking, well, where, if it runs out of steam, where is it probably going to run out of steam? 110 is an obvious one. 109 here, 109.83. But technically, there's a lot of fresh air up here. So we could be on for a run in the dollar index. And it's moved again, so I need to move that. Again, if it pulls back, this would be the area we would be looking at for a potential similar move on the Swissy. So in the Swissy now, last week kind of just broke through, same pattern, because it's made up, the dollar index is made up, the majority of it is the euro. And if the euro is going down, then the dollar Swissy is going up 90+% of the time. So the dollar against the Swiss franc has finally, after 10 days, 12 days, broken this major area of previous support and resistance there. It's pulled back and it's off on a run again. Now the logic for me is, well, where is this thing likely to run out of steam? Where do you think, if you were in this now, what would be your overall target for this and why? Any clues? If you bought this here and you've got your stop down here, 30 odd pips away, where do you think it's going to stop? Yep. Couple of areas. One, Ashley says 78.6 fib. So at that point there, I would take off half of the trade. It's also the whole number just below. Often you will see price bounce to the pip off 78.6 fib. Why? Because a lot of automated systems use it. and therefore it becomes a self-fulfilling prophecy. Then David says the 200. Well, the 200 is up at 90.30, and price is always moving to or away from the 200. You've also got 90 here just below. 90, whole number, decimal 10, previous major support and resistance. This would be my overall target for this one. And as there, if you've caught it this morning, it's 25 pip stop, potential 150 pip win, 1 to 7 risk reward. Brilliant. Swiss is going up, the euro is going down. Now, last week, the euro just broke the weekly trend line. There were clues before from MACD that this was going to drop. I will wait for this. You want this ideally now to break and close down here. Then tomorrow or the next few days, come back into here, stop above here, and looking for the short. The target initially is going to be here. But if this is going to be a major run on the euro, on the dollar index, and the euro is 70% of the dollar index, we could be back on here for parity or anywhere down here. This is a highly significant break if it closes. This does not count if it goes back above and closes above the 78.6 pip. And the New York boys were missing yesterday. They could come in and quite easily send this back the other way straight away. Pound USD, I cancelled the order this morning. I am waiting for the New York to open. I had an order at 25.10. I would have missed it anyway. Just a little bit leery until New York opens. Euro pound, I still have an order up here. Split it into two as I showed you the other week. Part of it is 30 pip stop. The other part is 50 pip stop with a potential down here around 120 pip gain. New Zealand CAD, I have an order in up here. Multiple reasons again. I've got a bunch of EMAs. I've got 61.8 fib. To tuck the stop behind, this is a 40 pip stop for a potential 200 pip gain. I would take part of it off here. I would take part of it off here and leave the balance to try to run. AUD didn't really do much after the news today, interest rates. NZD need a bigger pullback. Dollar yen, we were talking about this last week. I was saying the logical area for this to run out of steam is up here because this is where the Bank of Japan intervened last time. Ashley was looking at potential earth and sky long, and he said no because it was near this resistance. I said, well, it might go, but it didn't go until today. So he got it right, I got it wrong. USD CAD, I have an order to long down here. Once again, I am risking 60 for a potential 330. Take most of it off here and leave the balance to run. Right, I've left Ashley with 12 minutes this week, and he's very good at doing his little bit in 12 minutes, so we will be okay there. A lot of these are the same as last week. Again, this is the AUD yen. First target is up here, so risking 50 for a 200 pip. Why? Because it stopped here multiple times before. But I would probably take 60% off and leave the balance to run because it could go 500. If anybody has any questions, what I've been through, stick them in the chat box whilst we go to Ashley now, and he's going to have a look at what he's looking at on shorter time frames and the earth and sky. So over to you, Ashley.
Thank you, Mark. Hi, everyone. Let me just share my screen. Can you see the New Zealand yen? Yes. Okay, thank you. Right, so bad news is earth and sky, I don't think it really meets the rules this week because on Pierre's screenshot, basically it does show green lights on both, but on mine here, so it doesn't show me that same thing with the New Zealand yen and Aussie yen. But more importantly, you wouldn't have taken these two pairs anyway because you had the Aussie news last night and they kept the rates the same, which is why the Aussie has weakened that you're saying this morning. So yeah, I wouldn't have taken those anyway, just because of that news coming out. And as you know, the New Zealand economy also relies a little on the Aussie, so they're both quite correlated at the same time. So we had a drop on both of those, but I wouldn't have taken them because of the news. So I'm just going to go through some M2 charts and I'll show you something on the 4-hour that I see, some levels that we can focus on to look for short or longs. So on this Euro USD, so like Mark, I'm also waiting for the daily candle to basically close below this trend line here. And we've seen here a few fake outs. Price has pushed through yesterday, but I want this to break on the daily. And the level I'm looking here on the 4-hour is near this trend line. And I'm just looking where sellers kind of stepped in to push the price down. So I'm seeing here this big bearish candle here, and I'm basically focusing in this area here because I think the sellers have stepped in to push the price down. So a retest of this region would be very interesting back to this trend line, and I would probably go with a 30 pip stop, so around here. And then again, the target, like Mark already showed you, could be way lower down here. So possibly first target 130 for there. But again, need a confirmation on the breakout. Then let's see, the euro pound. Yeah, I was in this one yesterday because the price was below this level here, and it was just consolidating, I guess, because the bank holiday in the US. So I just got out over here because it was just doing nothing. And then I actually spotted this region here because price had gone up here. So I spotted there was a buyer's region here, and yeah, it basically got out of there. Morning it went up and it's come back down now again. So unless it breaks out this regions here, no trade for me. And I have the forward orders on there as usual for the shorts. And one move for the pound Aussie, I had left a forward order in for the news, but it came out negative for the Aussie, so this thing has gone up. But I was calculating the other way down as well in case it did spike through. So this way as well was around 200 pips away, and my stop is here. So if we had done around the same range today, then there could have been a possibility this could have gone higher. And I think, yeah, EURCAD, same region here. But yeah, I have basically the same areas as Mark, and that's all I have, Mark. Thank you. Any questions on the charts? I just had this trend line in here just to show that this could be a place where it could reverse. And then if it breaks out, then that could be a long opportunity as well. But you don't have multiple reasons there, just the trend line.
That was quick. I was copying all the links over in a blog post. You normally might whinge at me. I don't give you enough time. Rudolph's asking about the dollar Swissy. Am I not worried about 8,900? Let's have a look at it. Can you put the Swissy chart up, Ash?
Yes, this one is the USD Swissy.
Oh, okay, sorry. On the daily, you have it right. Okay, 8,900. Yeah, that's what I was saying, Rudolph. The 89.17 is 78.6 fib. So anywhere in there, I would be looking to take profit off if I was in it. I'm not in it, to be honest. I was busy this morning. But yeah, again, you're looking for multiple reasons why. If it's going to run out of steam anywhere, I mean, if that gets there today, that will be a 90 pip move, and the average is 64, although we've just gone through the summer, so it's been slow. So 78.6 fib, 8,900. I have 78.6 at 89.17. Yeah, for sure, that would be an area I would be thinking of taking profit. I wouldn't short it there because I would only have a couple of reasons. And what I've been saying to folks lately is focus on 5 reasons. If you're going to take a trade, you need at least, as a rule of thumb, 5 reasons to support the theory that price is probably going to react in an area. Now, from a long point of view, you've got the fib level, you've got the 55 EMA, you've got the break of the trend line, you've got the dollar indexes going up and the euro's breaking down. So there's lots of reasons to suspect if this thing comes back down again, having finally broken through, it's probably going to bounce there again. And it's probably, as you say, going to struggle. So 8,900, 8,917, that would be the zone. I also noticed there's a bit of MACD divergence on the daily as well, only a little bit. But yeah, that's certainly an area. If I was in it, I wouldn't just try to let it run all the way to 90, because there's a strong chance it's going to run out of steam before it gets there. Do we have any other questions before we
Mark,
go?
Also, something interesting I saw was, so like the dollar index, you have the one for the pound as well. And I see this 200, and it is in the same area as the pound USD.
Yeah.
So if that bounces off there, quite highly likely that pound USD is going to go up as well.
Yeah.
So yeah.
When I used to trade day trade, I would have one of the profiles on the charts would be all the majors. So you'd break the screen down into 8 little boxes, and I would have the pound, the euro, the Swissy, the Aussie, the Kiwi, the yen, and a few others. And I would be looking to see if everything was correlated. You know, if the dollar's going up, everything else should be going down. So you are looking for things to be in harmony, and that generally, if something's going down, you know, if the pound's going down and all the other majors are going up against the dollar, what the heck's going on with the pound? And then you start digging deeper, and 9 times out of 10, it's because news has come out that's negative for that particular currency. I noticed that you've got one-click trading on Ash. That's a bit risky if you ever want to take part of your profit.
No, it's not. I'm gonna prove it. I don't have it.
Okay. Yeah, just be careful, guys. Don't have, if you ever want to scale out of a trade, do not have one-click trading on, because as you go to try to close part of the trade, it will close the whole lot. So just a word of caution. Right, we will put the recording of this session in the blog later today with the links to the pages I showed you. I did have a brief chat with David from FX2 yesterday. He says that they're checking out what the CFTC want. He thinks that they are not going to have an issue the way that everything has been structured, and hopefully he's going to come along next week and update us with where everything is going, if he knows. So the problem is with the CFTC and the SEC, sometimes they go in with a big stick to frighten everybody to death, and then they don't leave any clarity until further down the line. But anyway, let's see how we go. Righty-ho, thank you for attending today. If you have anything you want us to discuss in more detail in a future session, please submit a ticket via the help desk. Explain what you want us to talk about and why. The more information you can give us, the better, and we see if we can fit it in next time. And next time I'm with you, I will try to go in more about the miners and how I hedge them and things. Righty-ho, thank you for Ashley in the UK. Thank you one and all from around the globe. And I'm sat here in Portugal, and the weather has calmed down a little bit now. It's not so hot, so we can even go out during the day. Thank you very much for attending. You are welcome. And Clive says thanks. Great one, Mark and Ashley. Thanks, Mark and Ashley, says Lexi. Chris says thank you, as does Daz, to Udo and Niraj. You are all very welcome, and best of luck. We'll catch you later. Bye-bye.